Hi, this is Nick Brightbill with Hershey Financial Advisers. As we come to the end of 2025, our goal in this update is to simply help you see more clearly in what's happening in the markets and in the economy, so you can be a wise steward of what you've been given. At HFA, our mission is to honor God by leading people to a better way and empowering them to fulfill a vision beyond themselves. That means we focus on perspective, not panic, and on planning, not prediction. Let's walk through the key themes that we're paying attention to as this year wraps up. First, the stock market headline for 2025 has been AI and big technology companies. We're paying attention to how much of the S&P 500's performance is actually coming from a very small group of mega-cap AI-focused companies. Recent data show that roughly 20 stocks now make up over 50% of the S&P 500's total value. That is up sharply from about 28% a decade ago. And companies tied to artificial intelligence, names like NVIDIA and Alphabet, have driven large shares of this year's gains, which I'm not labeling as bad, but when a broad index becomes heavily dependent on a handful of companies, it just reminds us that diversification matters and that owning the index can sometimes mean being more concentrated than it appears. We're also paying attention to the housing market. Nationwide, home prices remain elevated. In early 2025, prices were about 60% higher than what they were in 2019, and median existing home sales are actually around $400,000, roughly 5 times that of the median household income, with sales at 30-year lows. But some of that pressure is starting to ease. More than half of the U.S. states have seen home values flatten or decline this year, especially in markets that ran the hottest during the pandemic, like Dallas, Texas, and Nashville, Tennessee. That's a classic example of regression towards longer-term historical norms. Prices can move away from long-term relationships like price to income for a while, but over time they tend to drift into more reasonable ranges. Not every local market moves at the same speed, but the broader pattern is generally there. Another theme this year has been precious metals. Gold is at or near record highs. It's up more than 50% year to date, and silver has broken above its previous peaks, but trading with even more volatility. Historically, these moves can be dramatic in both directions. In the late 70s, gold rose from $230 an ounce to $850 an ounce in 1980, while silver spiked to roughly $50 before crashing in what is known as Silver Thursday. We're paying attention to how elevated these prices are relative to their own histories and how quickly they have moved, recognizing that precious metals can experience long stretches of sharp declines after periods of immense enthusiasm. You may hear commentary that earnings still look really strong, so the market must be on solid ground, right? Well, we're paying attention to the fact that earnings and economic data can look fine right up until they don't. Before the great financial crisis in '08, many indicators, including corporate profits, appeared healthy even as risks were quietly building in the housing and in the credit markets. The consensus right now is that lower interest rates generally support stocks and real estate, and it seems we're moving into a season of lowering interest rates. But when home prices are already very high and affordability is stretched, lower mortgage rates can simply unfreeze a stock market, encouraging more people to list and bringing prices closer to normal rather than pushing them up to new extremes. We're paying attention not just to where rates are going, but to where the prices already are relative to long-term history. 2 areas we are watching as a signal of risk appetite: small cap stocks and cryptocurrencies. Over the last decade, large cap stocks in the S&P 500 have outpaced small caps in the Russell 2000 by roughly 150 percentage points in total return. In crypto earlier this year, major coins experienced sharp declines, Bitcoin falling 30% from its peak at 126,000, and the broader crypto market erasing over $1 trillion in value before a partial rebound. We don't invest in crypto at HFA, but we are paying attention to this as it is a bellwether of speculative risk. One more piece of the puzzle when we look at overall market sentiment. Outside of the markets, one of the most common concerns in our client conversations this year has been fraud and cybersecurity. The FBI reported thousands of financial account takeover complaints in 2025, with criminals often impersonating banker advisor staff using very convincing fake websites or messages. The financial sector remains one of the most heavily targeted industries for cyber attacks, both with volume and sophistication rising significantly. We are paying attention to these trends, which is why you may notice more verification steps, more callbacks, and double checks from our team. The goal here is to protect you, your accounts, and everyone involved. So where does all of this leave us as 2025 comes to a close? We're seeing stock market heavily influenced by a small group of AI-driven giants, a housing market gradually regressing toward more normal price-to-income levels in many areas, precious metals at historically elevated levels after a very strong run, and small caps and even crypto telling us something about where risk appetite has been and how quickly it can change. Rather than trying to guess the next move, our focus is on vigilance, diversification, alignment with your goals, retirement income, caring for family, giving generously, and living a life of significance. At HFA, we see wealth as a tool entrusted to you, not simply an end in of itself. Our calling is to help you manage it wisely with humility, diligence, so you can pursue a vision that goes beyond you. Any of these themes raise questions about your own plan. That's exactly what our progress meetings are meant for. Walking through your situation in detail, making sure your financial life lines up with what matters most to you. Thank you for taking a few minutes with us today and listening to this update. If you like this video, please click the like button below and subscribe to our channel. There'll be more educational content coming out in 2026. Thank you so much.